Good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. We just got the release of advanced goods trade balance here in the United States. Not a major print, coming in slightly better than expected, negative 64.8 billion versus expectations of negative 66.4. The bigger read is the wholesale inventories coming in at 0.4% versus expectations of 0.2. Seeing a little bit of a recovery in the dollar here. We'll go over the dollar crosses early in the session. That said, good to be with you guys here this morning. Alan, Carlos, Mark, Pooja, Steve, Ziad. Great to see you all in the room. On the docket for today, keep in mind you have some Fed speakers on tap. Yellen is supposed to be speaking early in the session. She's not expected to be commenting on monetary policy. So as far as that's concerned, it's going to be a variable whether we actually get any play off that. But on the docket for today, obviously DXY. We'll talk about dollar yen. It's a frustrating trade. Won't really budge right now, but we'll continue to track that. Dollar CAD, Aussie Kiwi with an interesting near-term down slope. Euro Oz, looking for that possible setback. Euro Yen, also for the pullback. And then we'll jump into the dollar crosses. Aussie, Euro, Sterling, and the commodities, crude, gold. I do want to talk about dollar ZAR and dollar peso. I briefly went over them yesterday in the webinar on Daily FX, both of which have central bank rate decisions this week. So we'll take a look at both of those trades. As always, guys, feel free to stop me with any questions or trade setups. Let's jump right in. Here's what the dollar index looks like early in the session. So this guy broke below 99.43, 99.53 to start off the week. We talked about that yesterday. A nice gap to the downside. That offered instant resistance, still remains near-term resistance. So 99.43 into 53. On the downstretch, it looks like it's losing momentum. Daily RSI is right basing at that 30 level. If you take a look at near-term price action in a moment, it looks similar. But the key region of support isn't till just a tad lower, 98.70 to 98.60. We talked about this region also for a few weeks now. You got the 200-day moving average, which hasn't been touched since back here in October of last year. You have basic slope support extending off the lows from last year. And you have the 2016 open, which was a very decent pivot in price, all converging right there. So, the question is, do you get that drop first before you pop higher or not? On the near term, this is what it looks like. I'm of the mindset you might see a little consolidation here, maybe one last stab into that low. But you can see, again, momentum giving us some divergence into this low. Not a reason to get bullish, but a reason to soften your bearish stance for sure. There's that 2016 open followed by that trendline support off the lows. Again, 98.60, 98.70 region, key support here for the dollar index. A break below that level, and this thing, there's really nothing until 97.87. And that's sort of a big region of support subsequent if we do break. Near term, you're at risk for that last stab. If we do break and pop through 99.53, I'd be looking for a much steeper recovery back towards maybe even 100 spot 42 would be a really nice spot to start looking for the shorts. But as it stands right now, it's Tuesday. You got a nice weekly opening range below resistance. Respect the break. So even if there's not a clear-cut directional bias on the immediate term, you know exactly what the game plan is. Pop through 99.53, look for that recovery up into 100. On a break of the near-term lows here, this is kind of the main region of reaction you're looking for. 98.60, 98.70. Any questions on the dollar index? There's really not much difference to update from yesterday. Again, really nice gauge of what the dollar is doing in and of itself. Very heavily weighted the euro on the DXY, and we will look at the euro, which is also showing similar price action at the highs. All right, let's move right on. That's number one. Number two, dollar yen. So the abomination, I guess I shouldn't be surprised. Look, this thing posted one up day since the 14th. Okay, so since this day right here, we had 8 down days in a row into support. You broke the yearly opening range lows. That's bearish. You broke the 38.2 retracement. you broke slope support, which has been a decent pivot. Nonetheless, you're probing through it right now. We haven't gotten a close below it. Momentum is sitting at 30. Near-term divergence on both the 4 and 2 hour charts are suggestive, again, that you're seeing waning momentum. So all the hallmarks are there, except price action. So I don't necessarily want to be initiating any new shorts at this point. I don't want to be trying to call the low just yet. But from an intraday standpoint, what we were looking at yesterday was this. So obviously, again, that slope on the daily chart that we were just looking at. Here's the 4 hour chart look like. You had some building bullish divergence as price action made a new low. The oscillator made a higher low. Take a look at the 2 hour. Okay, same thing. Series of higher lows, a series of lower. Yeah, a series of lower lows. And again, puts the emphasis on this opening range just below resistance, former support. It's exactly still where we are. Okay, haven't given up on it yet, but I can tell you that this last 2 hours here hasn't been the most encouraging. So I still think you may get that last puke out towards 109.75, but broadly speaking, it looks vulnerable for a near-term pullback. Now it's important to note what we talked about on the daily chart here. Objectively, this is a break. So certainly there's a massive risk upheld to the downside while below this key region. But near term, a rally back into 111, maybe even 112.57 may be on the cards before this thing turns around. So look, for dollar yen, guys, I'm just on the sidelines. I'm not going to really mess with this. Keep in mind, it's the end of Japanese fiscal year. It's the end of the quarter. It's the end of the month. And we're heading into the end of the week. Everything kind of maxes out on Friday. So as you get closer to the end of the week, it's one of those sessions where you do want to lighten your load, reduce leverage, and kind of just take a little bit more of a cautious approach to the markets as we kind of close out the quarter. A lot of position readjusting and whatnot, and portfolio readjusting can really mess with the intraday price action. So just keep that in mind as we get closer to the end of the week. Dollar yen, resistance 111 into 111.45. Key support is still 108 into 43.77, this zone right here. You can see it larger on the daily chart, the 50% retracement. On the near term, it's also the 100% extension of the decline off the highs. So that gives you a range of 108.43 into 108.77. Doesn't converge on slope till the start of the month, but certainly on a continued move lower, that's sort of your main your main target. Put a gun to my head. Again, I think you stab at the lows and then you kind of make a little bit of a fake out reversal to test former support as resistance. Pete, you're right. I mean, I shouldn't be surprised. He says there's 8 down days on the Dow Jones as well. Sure, absolutely. It's the worst January or the worst March that we've seen since January of last year, I think. So, yeah, they're tracking risk pretty well. Absolutely. And we'll take a look at the S&P, actually. Let me jot that down. Got a nice play on that one last week. Okay, any questions on dollar yen? The abomination, I'm putting it to the bed right now. I'm just going to keep tracking it, but I'm not really interested in getting too involved as we get closer to the close of the week. Dollar CAD was up next. Here's what dollar CAD looks like on the daily chart. And here's what dollar CAD looks like, or looked like, whoops, last night. Okay, so I guess there wasn't really much to look at on the daily chart. This is really the focus that we're looking at. So if you guys recall, the levels remain exactly the same from last week. Bearish invalidation at 34.30. We're broadly looking lower. Near term, the range was 133 into 134. That's basically what ended up being this week's opening range. I mean, the low came in just ticks above 33 at 33.18. The monthly open is still basically at 33. That's why we had 33 as sort of major support. And 34 is resistance. Stabbed a little bit higher. 34.13 was the high in overnight trade. You had obviously 34.30 as your bearish invalidation level. I have no change in this. Okay, the momentum signature doesn't look all that constructive. you know, I'm still looking lower against 34.30. We need to see that break sub 33 to get this thing going. Now, this could be a break of the near-term downslope, and if so, it's still a good area to keep as your near-term bearish invalidation. But as long as 34.30 holds, you know, we're broadly looking for a downside break of this ascending formation. We haven't gotten it yet. So we'll see if we can't get that move here. Okay, I was just checking to see the docket for Canada. Here's what it looks like. We still have GDP figures coming out on the 31st. Keep in mind, these are monthly GDP figures, so they're not usually impactful as much as we do, as much as we get with the U.S. GDP figures, which are usually quarterly. So keep that in mind to the close of the month. But other than that, look for the dollar to really drive things, as well as the prices of crude. Questions on dollar CAD? That's number 3. Number 4 was Aussie Kiwi. Here's what Aussie Kiwi looks like on the daily chart. And here's what Aussie Kiwi looked like last night. So the basic premise of this is just the downslope of what we're in right now, really clean. And you had the weekly open converging on this sliding parallel, basically at 108.50. So before we get into the intraday chart, here's what the daily looks like. You guys have all seen this chart before. For those of you who haven't, anyone who's been here for over a couple of years has seen this repeatedly. Slope of influence from 2014, which has continued to guide price action for the last 3 years. Really nice pivots on major reversals in the pair. You saw both of these sliding parallels, which caught the peaks here into the close of last year. You got an overshoot and a recovery break back below. Okay? Not the cleanest this time around with that slope, but nonetheless reversing within a few days off that breach and a break back below 70 here in momentum. So certainly the move back below 109 changed things on the intraday. I do think that you still have a little bit lower to go. Near term, though, you could see a little bit of a recovery off this region. Ultimately, I'm looking for that stab into 107.54, 107.70. Really nice area to look for some support. A 38.2 retracement off the low. Former swing highs from back here in July and August of last year. I guess it's September. But it also converges on the 50 line. So that region here is sort of what I'm looking for to base maybe a larger rally off of for Aussie Key, but certainly in the near term does foreshadow or suggest you should be looking lower. On the intraday chart, looks like this. Some really nice parallels off the highs. I'll bring this into a 120 just to give you a little bit better look. Here's the 60. Very, very basic. Trendline resistance. Take a parallel. Extend it off that low gap that we made. Nice touch, nice touch, nice touch. Converges on the weekly open. Okay? Near-term resistance here for Aussie Key. Key support, we just noted, 107.54, 107.70. Again, that confluence region of former swing highs and that 38.2. That region converges on basic slope support. Whether you take it off the lows or whether you take it off these lows, both of those highlight that region into the close of the month. Not even, into the 29th. So clear-cut levels here for Aussie Key. What would be the sort of impetus or what could be the trigger to get this thing going? You don't really have much as far as economic data is concerned. Either from Australia or New Zealand. So we'll have to be kind of just tracking price action a little closely. Keep in mind, always take it back to the basics, guys. We do all this, we highlight our levels, we get our biases, but at the end of the day, price action is what's going to talk. And at the end of the day, you've set a beautiful, objective weekly opening range. Very, very simple. Monday, Tuesday stretch, you have a nice low, you have a nice high. The high now converges on slope resistance. Look for a break of that slope. If you get this topside break, I would be looking for that rally into 108.80. Not necessarily interested in playing the long, but another area of interest that we would start to look for that last move into key support. Questions on Aussie key. Even have some nice near-term slope here you might want to look at. Possibly a bear flag. But guess what? Also converges and highlights resistance at the weekly open. Not bad. Here's a 30. All right. Do you find the 5-minute useful on Aussie Kiwi or too choppy, says Pooja? I'm always looking, whoops, not 5 month. I'm always looking, Pooja, at the 5-minute when I'm actually in the trade. This is kind of when I look at when I'm just like, just a naked chart when I'm trying to get into the position and out. Sometimes I'll have RSI on there, obviously, for the intraday positioning, but yeah, I'll always look at the 5-minute just because I want to see the subtleties and what's happening in near-term price. But you don't want to take the triggers too aggressively. If you're looking at RSI, you're looking for some sort of tell to get into the position. You don't want to stress the triggers because the closer you get in near term, the lesser impactful a trigger break will be because you're going to go from oversold to overbought in just a matter of minutes, right? So you're not going to obviously be in and out of positions that quick. But yeah, once I execute the position, Pooja, or when I'm looking for the trigger to get in, yeah, I'll definitely be referencing the 5-minute. But it's really the levels. It's all about the levels. Does that make sense? And the problem that you do run with getting too close in intraday price action, Pooja, is what you're saying right there. You start to see a lot of chop in that 5-minute chart, and you shake yourself out. So once you're in the position, put your stop, put your limit, then zoom out, kind of let it do its own thing. Okay, I found it particularly bad on this pair. Well, it's Aussie key, and it's a tight range to begin with, so I don't necessarily blame you. A lot of back and forth. And keep in mind, that where we are, broadly speaking, it's still a very tight range since the start of the week. So once this opens up, though, you'll start to see those moves start to pan out. So long story short, looking to see if we can get one last pop higher if you're not already short to get into this position, looking for that stare down into 107.54, 107.70. That's number 4. Number 5, great point. When I'm in the 5-minute, I panic on moves. Yeah, Pete. Just means you're human, man. Everyone, we all try to say stay objective. You want to be almost robotic when you're trading. But at the end of the day, we're all human, right? And when you're seeing price action really start to take off in a 5-minute chart, it has the propensity to really start to mess with your head. No one knows that better than me. I've been, near-term trading for a very long time, and I've been stung with that same issue very, very often. So, I'll use the 5-minute for a trigger to get in. If we're getting near a target, I'll use the 5-minute trigger to get out. But once you're in the position, and you're looking for that target, kind of just let it do its own thing. Euro Aussie. Here's what Euro Aus looked like last night. Right. So huge area of resistance. Okay. Massively critically important. It's 143.02. It's a 618 retracement of the decline of the yearly high, which came in on the first day of trade. Whoops, I might be lying. Yes, I am lying. That was the high from December 30th high. So it encompasses all of this year's trade. It's off that peak, off of the median line, takes you all the way down. Exact touch gives you 143. A same parallel, okay, of the slope. This is just trendline resistance off the 2016 highs. Comes in right there. Basic slope resistance of the advance off the lows. Okay, we probed through it. You got a false break there last week, but guess what? Trendline resistance converges just higher. Huge, so massive area of importance. So you have two ways of playing this. The breakout potential on a move higher here, you're probably going to see this thing pop right into 44.30 before you know it. But at the same time, near term, you're at risk for the pullback. You're seeing divergence in momentum, and you're seeing price hold pretty nicely in that pivot range. So how do we play this near term? Here's what the intraday chart looks like. You got a weekly opening range that bumped right into resistance. We talked about this trade earlier. Okay, here's what the 4-hour looked like last night. You got the pullback off this region. We came right back and checked that as resistance again, holding below that 143 handle. Keep in mind that's also the 2016 low day close at 143.03. So you have a confluence region there with median line resistance. Huge, just a beautiful play. And when the weekly opening range takes precedence below that, again, the reversal plays in this tend to be the ones that pay the most. But at the end of the day, it's a clear-cut resistance target. So if you see that topside break, there's really nothing on tap till 44.30. At 44.56 is a soft target. 44.85 would be a longer-dated 786 retracement. So very nice levels. I do think there is a risk near term for a little bit more of a pullback here, but you want to respect the weekly opening range. Broader trade remains constructive above 40.55. So here, I'd be looking for a reaction. Here, I'd be looking for a reaction. Both of these are areas of interest for possible exhaustion, possible bounces or recoveries. This is the weekly opening range low. So if we come into the weekly opening range low and it breaks, objectively, you're looking for that move lower. Okay, other than that, near term, this is the range that's in focus. Really, really clean-cut targets. Again, here's what Euro Aussie looked like to start off the week. I mean, we just wrote about this of the previous day, and we were talking about, hey, if we get that pop through 42.17, which was the exact 100% off the low, I've since removed it. But if you get that pop, there's really nothing except 43 as your next target, and it's exactly what you got. You got that break above 42.17, popped into 43, and this is now the confluence region of resistance you need to respect. All right, so clean plays here on Euro Aus. Any questions? That is number 5. Moving right along, number 6 is Euro Yen. Here's what Euro Yen looks like. So also a very clean near-term play in my estimation. Here's what it looks like on the intraday chart. You know, it kind of puked out. Oops. But I want to see a hold basically right here. Here's what it looks like. Again, here's what it looked like last night. Sorry about this. There it is. So it looked to me, okay, you have divergence here into the lows, right? Price action making a new low, price action making a new low, the oscillator making a series of higher lows. Popped right off of confluence support. Literally, you couldn't get a cleaner pop than that. 119.27, 119.33, key Fibonacci confluence as well as slope support. Boom, came right into this region. So as we were talking yesterday, or as I was writing that piece, it looked like it was popping through, okay? And a break of the objective Monday, Tuesday stretch would take you into 121 possibly as high before turning over. So it puked out real quick. Literally the next couple hours just reversed and it stayed right back below that basic 236. And now the pullback is testing this slope again, which has offered support, 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 break, resistance, resistance, may offer some support here. I don't know. At the end of the day, the weekly opening range is just lower. So all these trade setups, guys, and if you're sick of hearing this, it's the same exact scenario and environment that we've been in for months now. Monday, Tuesday, you're kind of like grinding your teeth, just trying to get a position in. And then as you get into Wednesday, Thursday, Friday, boom, 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 market starts to move. So I think you're seeing the onset of that today. Again, I do want to drive home the fact that we're heading into the end of the fiscal year in Japan. We're heading into the end of the quarter, month, and week. Things are going to get dicey. So lighten the load. Okay, I'm very likely to be very, very light on positioning in general heading into the close of the month here. So Euro Yen, any questions? Key support still 119.26, 119.33. I'm looking for a break of the weekly opening range. Again, my hesitation with this is the yen. Here's what the daily chart looks like, by the way. Okay, the whole premise, and we talked about this last week, was this region as this thing came into support, 119.33, 119.26, perfect bounce. You had also the median line, some slope for the upslope off of the advance from last year's low. So could be a bigger rebound before all is said and done and you find a new low. $119.26. This is also the monthly open and the monthly opening range lows. So it's so much key support down here. See if this rebound has one more breath to the upside before all is said and done. Questions on Euro Yen? That is number 6. Okay. Now, we've gotten some of these exotics and crosses out of the way. Some attention to the dollar crosses. I want to start off with Aussie. We'll touch base on Euro and then Sterling. I'll be presenting a Sterling piece on Daily FX later today. Gives you guys a sneak peek on that. Look, I like the upside. Obviously, there's some news coming out with all this Theresa May and the moving forward and the progression with invoking Article 56, so we'll see how that goes. But from a technical standpoint, Sterling's at a very interesting point, so we want to talk about that as well. First things first, here's Aussie. Okay, so here's what we looked like last week on some of these trades. I just want to kind of review sort of how we've changed the setup. So this pitchfork, kind of gotten rid of it. The point in fact is if you took that same slope and extended off this high, it literally caught the new low. The target that we were talking about was 75.06. Aussie dollar is currently trading at 76.12, having already tagged that region. So you're kind of down here in this zone after making that larger reversal off of key resistance that we were talking about, a critical zone at 77.35 into 77.56 last week. So look, you could get a little bit more of a bounce off this region too. You've now marked 5-6 days down here in a row for Aussie dollar. Very similar trade where you're getting some exhaustion, right? Here's what Aussie looks like on the intraday now. Okay, gotten rid of that pitchfork and I'm using just a basic slope resistance, okay, off the highs here. And if you do that, you can see that both of the highs that we made this week were governed by that, by that slope. And that slope now converges on the 50% retracement of the advance off the lows, which is near-term resistance. So we tagged 75.90. It's a basic 618, really nice Fibonacci consideration. You're getting a rebound here. First area of resistance is 76.20. Okay. Second area of resistance, 76.33. So leave yourself a 13 pip region here. This is the weekly open, which offered resistance last night in Asia. So it's not something to ignore. If we break through the Asia highs, then you're looking for the monthly open, in that 38.2. That also converges on the weekly opening range. So my point being, guys, if you see this break, yeah, I'd be looking to buy a pullback targeting 76.50, targeting the monthly open, but super nimble because at the end of the day, we're still looking for a new low in Aussie. We know we broke back below the monthly open. This is a huge resistance region. I don't necessarily think, you're looking for 74.50 or anything like that, but near term, after a 5-wave up, I'd be looking for at least a nice clarity on a 3-wave down. Or if we are going to do some sort of wicked consolidation here, I'd still rather be selling rallies. So near term, watch for resistance 76.20 on a reaction there. If we break higher, specifically the weekly open, I'd be looking for that larger recovery in Aussie. That being said, you're in the trend until you're not. So 76.20 is immediate resistance in 76.30. Questions on Aussie? Euro dollar, that will be number 8, looks like this. Here's what we looked like earlier in the week. So this was last week, rather. 108.72. We've talked about that region for months. It was the 2016 open. objectively speaking, that's not necessarily going to have too many merits heading into the next year, except that price action alone at this threshold has been ridiculous. Key support, break, key resistance. Here it is again, converging on the 200-day moving average. The high peak we made yesterday was just pips off the high day close that we made from back here on election day. So listen, a good area to start to look for a little bit of a pullback in the euro. Are we still constructive? Yes. Are we testing the upper limits of a longer term downslope? Yes. Yes. It's the end of the month. It's the end of the quarter. If it's going to make a break, there's probably going to be some light liquidity there, and it could just give us that pop into 109.80. This is a big region. This is 100% extension off the low, so two equal legs up, and it converges on the upper median line parallel of a slope we've been following for a while. Been pretty fruitful. So the levels are pretty good. I'm expecting, looking for, a possible near-term pullback to get long for one last stretch. How deep that pullback comes in, here's what it looks like on the intraday chart. The onset of that would be with a break below 108.19. Okay. Keep in mind, for us to fill the gap, we would need to come in to 107.96. So, this region here is pretty critical as near-term support, and that's, in my mind, what would give us a little bit more of a downside bias on the immediate term if we break. Certainly the risk is, again, near-term for that last kind of pullback into this region first. This is what would mark larger correction. But you're coming up against a big resistance region on a daily basis. Pretty huge. And you could see, again, don't take my word for anything, guys. Just go back in price action. You could see what the 200-day moving average has offered. I'm not a big moving average guy, and specifically for those who are, especially guys who trade the crossovers and this kind of thing, that's not really my cup of tea. But certainly when I look at price action objectively and I can see that the moving average has offered major clear pivots in price, it's not something I want to ignore, right? Obviously, election day was a emotional move, but support, pivot, support, pivot, resistance, breakthrough fueled the run, resistance, right? So the confluence with all of this stuff here matters, okay? Bring this into a line chart. You can see that it's been perfectly preserved still, and that's the level to beat for the breakout, quote unquote, trade in euro dollar. Longs are at risk near term below this key region. Questions on euro? We're talking about things getting messy in price action. This is a pair that's likely to get messy as well, especially if the pound starts going all over the place into the close of the month. I could see a lot of chop or even sideways movement up here. But my initial focus is look for the pullback. On that pullback, I'd want to get back on the long side. In fact, if we get back into the gap region, so we get to fill that gap, it's still a 108 clip on the downside. So euro dollar. Another thing to consider, overnight lows as well. Highs of last week, same slope as the operative slope we've been following off the lows. Not bad. All right. That is euro dollar, number 8. Number 9 is pound. Here's cable. And here's my thoughts for today and what I'll be writing about on daily effects. Back to the daily chart, this thing, well, where do I start? We were talking about yesterday in the webinar, the breakout, right, above 24.33 and how that really changed everything for the pound near term. This constituted a break on the 21st of the monthly opening range, the monthly open, a longer term slope that we've been following, the 50 line for the current operative slope off the lows, the 100-day moving average. I mean, you name it, it got invalidated with that move on the 21st. The rally found some resistance initially at the same slope off the lows from last month, okay? So very clean area to find resistance for a few days. Pullback was pretty shallow. Here's the topside pop. Now, the major area of resistance for pound is not until 126.75, 126.70. Give that 25 pip range a lot of respect. It's a basic 236 retracement from the decline off the highs, from the Brexit high. But that's not really what the point is. The point is it's the high day reversal close from back here in December. On the upside stretch into 127, it's the high for the year. So it's the objective yearly opening range high. You have the 200-day moving average, again sneaking right in there, and the current operative median line that we've been following, right, of the same slope that we just covered, which gives us so much conviction on that gradient. Resistance, support, resistance converges right here in that 25 pip range. So I want to stay constructive above 24.33, 24.30, basically this 100-day moving average into that 2016 low day close, which is still preserved as the low, the 50 line, and the 100-day. So I want to stay constructive near term above this. I'm ultimately looking for a rally into this key region. This is sort of the big breakout zone. Okay, above this, you're looking at 127.98. We'd need to composite some new levels for the upside stretch. In fact, where's a basic 38.2 come in? Not until 131. I mean, we're talking longer term here, guys. But point being, this is sort of your major area of resistance near term. So for the pound, on the intraday, not the most convincing bullish RSI signature. Failure to make some fresh highs here in the momentum as we've continued to make fresh highs in oscillator. Yeah, gives a little bit of a hesitation. Again, 124.33 is still the level to maintain a support to favor the upside. Key resistance 126.70, 127. Okay. One thing I want to highlight is this. There is a trend line that kind of sneaks in between there from this high. I don't want to stress it. It's only a 2-point trend line. 2-point is speculative. 3-point is confirmed, right? Any 2 points can make a trend line. So I don't want to start tracing trend lines all over the place because I could draw them any which way and then I'll find one that I like, right? And in that case, you're just matching the analysis to price instead of vice versa. So when you look at this, that gives us a level right around like 26.40, I was estimating earlier today, as an area of which just to keep an eye out. If you have a long scalp in play and you do get that break, maybe shave off a little there just out of respect for that. That's also pretty darn close to the high close for the year, but really it's that 26.75, 27 level that I think we need to grant a little bit more respect to in Aussie or in sterling. Any questions on cable? So again, this is the setup I'll put up later today. Again, putting the emphasis near term on this near term range, looking for that last spike here for a larger reaction off that 27 region, constructive above 24.30. Okay, let's take a quick segue now into commodities. How about that crude trade, huh? We have a little wager on the desk going that we've been doing pretty well on. So look, no one was advocating for the necessarily to get bullish, looking for a 50 clip or 52 clip on crude, but we've been highlighting this key support for literally, 3 weeks now. And crude has continued to respect it. It's not just the fact that it's a 618 retracement at 47, but you had slope support on the downside. You had uptrend slope support. And you have continued, building divergence into the lows. So there was a lot of things to look at. Vlad wants to look at nat gas. Let me add that to the list. Nat gas. Gotcha. But, for crude, should I do it? Should I do it? I'm going to do it. Here's the weekly chart. Right? Same thing. On a closed basis, there was a slight probe, but we're still holding that key support. And so weekly chart, 236 retracement of the advance off last year's low, 50 line, 52-week moving average. Still there. Okay? So until I get that weekly close below, I don't understand these calls for 43 and and $40 barrels of oil. We got to break support before we start looking lower, right? So we're still there. Interestingly enough, guys, there's been a lot of banknotes that have been coming around, obviously with these moves in crude. And one of them made this huge assumption that me and Jamie were just hysterically laughing about. And they were talking about what the impact of a $48 static crude prices would have on CPI around the world, or i.e. inflation. Obviously, energy prices are a huge input when trying to gauge the inflationary outlook. So if all else held constant and crude held at $48, they were foreseeing a slower CPI inflationary run, and specifically would hit a lot of these commodity currencies a little bit more aggressively. That's a huge assumption. Why the hell anyone would assume crude would stay at 48 for the entire year? I don't know. Those models also suggest all else remains constant, which is just an unfathomable idea in my mind, having traded all these years. So my point being, guys, all these research and longer term projections for crude, they make some radical assumptions. And for us, price action is always going to be the major driver. So look, on the near term, you have to respect 47 as near-term support. We have to see where we close out the week. We started off the week talking about resistance up at 48.70, up at 49.17. That's still the key zone to beat. You have the 200-day moving average, the 50% retracement of that range, just near-term off of the November lows, but also some former slope support and those swing highs. So 48.70 into 49. The level to beat, or that break, would suggest recovery. Broader picture just still remains bearish. Basically sub 51, but we'll call it 50.80, 50.90, basically the yearly opening range lows. The broader trade is bearish, okay? But we're at support. There's really nothing left to be said but that. We made a break of the yearly opening range. It's a beautiful time to break it at the end of the first quarter. But that downslope is at support. So you got to respect that for a near-term rebound before you look for a new low. Questions on crude? Popular trade. You're going to continue to hear about it in the headlines. Gold looks like this. Here's what the gold trade looks like on the daily chart. Again, another one that kind of pays to look at the broader picture real quick, so I'll reference this just for a moment. Gold coming off of or approaching rather, a near-term slope resistance that we've been watching. This is the same operative slope we've been following since the base here, or derived, I should say, not following since. We've been following it since last year, but derived off the lows from 2013 that we made back in June and the lows that we made in 2015. The slope has been phenomenal. Okay, here's some sliding parallels catching resistance right now. The other sliding parallel catching the highs for 2015, 2016. So area for pause, right? Area for pause. Ultimately, we're looking for 1278, but we need to get through this first. We've had a nice 3-week upslope off support. Intraday or daily, you got the 200-day moving average. The yearly opening range highs, important level to keep in mind heading into the close of the first quarter. And an area of which you could get a pullback. Now again, I like this higher, but you're at resistance. Here's your here's your monthly open. Here's your monthly opening range highs. Yesterday was the break of the monthly opening range highs and close. But you're still at a resistance threshold, both on the yearly opening range high and moving average. Point being, guys, use some caution. heading into the end of the close of the month. I like it higher. I would say near-term support is still somewhere around 1236. I want to stay constructive above 1220, looking for that stretch into 1278, 1277. Questions on gold? Hey, look at that. Some basic parallels off the low further highlights that key region of resistance. Okay. That was number 11. Let's jump into nat gas here for, what was that, Vlad? Here's what nat gas looks like. This will be number 12. And then we'll take a look at S&P and dollar ZAR real quick if we have time. But you want nat gas. Hello. Okay, here we go. Sorry about that. Okay, as you can see, I haven't updated this chart yet this week, so let's take a look at this together. First, starting on the daily chart, looks like we made a break of that downslope that we were noting from last month. Nice hold. You're now checking in near-term resistance. This is the 100-day moving average, converging on those highs that we made from, what is that, September of last year. One, two, three, four, five. I don't know if there's any divergence up there. Slight divergence in price, real subtle, which actually I love to see. Okay. Okay, let's check out near-term price. So momentum, just some notes, some things I'm taking in my head as like sort of notes I'd be looking at. Momentum is struggling at 60. That's typically what you want to see on down slopes or downtrend. So if this holds 60 and you see a reversal or a near-term trigger to the downside, it would kind of be suggestive that you're still working with that broader downtrend. That being said, let's look at what the intraday chart looks like. So it looks like we did look at this last week. That trend or that pitchfork offered some support, some support, some support. The break of the upper parallel has now been offering resistance. Or, excuse me, the break of the upper parallel, yeah, former resistance has now been offering some support. So here's the reversal right back into the weekly open. So we're basically unchanged, flat on the week at this point. Here's your weekly open. Yeah, you're getting divergence, but it's ugly divergence. This divergence above 70, I hate to actually rely on. Look, on this trade, I would just be mindful of that 309 level. You know, broadly speaking, I do actually like the upside, but it's kind of screaming at me for looking for a near-term correction off that. I don't know if that's just me, Vlad, but certainly on the near term, you know, I wouldn't want to be initiating new longs into this unless we clear 309. So where would you look for support? I'd be looking at that 200-day moving average, basically those swing lows that we made. Again, on the intraday chart, as far as support's concerned, I'd want a new structure to work with, and that actually works pretty well as resistance for those last couple of hours. Support on the bounce we made last night. It's even cleaner. There you go. It's sort of like a drop into like this zone, which is actually right around, look at the daily chart, that 200-day moving average might be a nice area which, to base another vault. But near term, I'd be mindful of 309. Big pivot zone. Make sense? Yeah, Kelly, I got you. He says, good morning, Mike. I missed the dollar yen. Can I get a peek at your chart for a picture? Yeah, sure. You missed my distaste for it as well. But here's what we're looking at. Look, again, if you put a gun to my head, I still think you want to look higher. But as long as you're below 111, 111.44, you got to be cautious. You got to be cautious. That's the break I need to get the recovery, and then I'd be looking for 112.57. Vlad, does that make sense? Yes, yes, Mike. Thanks. Hey, you're more than welcome, sir. So yeah, feel free, Kelly, to take a snapshot of this. Levels unchanged from yesterday, so it's the same as yesterday's intraday update. Again, here's the daily chart. As I was saying earlier in the session, Kelly, it's the end of the Japanese fiscal year, the quarter, the month, and the week on Friday. So, this is definitely a pair to be watching or to be cautious of on all the yen crosses in general. I'm short 110.80 from 110.82. Nice. So if on the implications for the short exposure, watch this slope right now. I know we invalidated it yesterday, but that's the weekly opening range low. And that's kind of what we're pivoting on still. So just watch this weekly opening range. You know what? I want to bring up that low just to have that marked. Like that. 110.10. And you're still marking divergence. Hey, you're more than welcome, Kelly. Cheers. All right. So we got Nat Gas. That was number 12. Dollar ZAR, number 13. I know this is not a pair I usually mess with, but boy, did that thing make a move. I mean, what a play. And it was so clean technically, I just wanted to slap myself because I didn't do anything about it. Here was the move. We talked about the onset of this yesterday. As it was coming off of a key confluence support zone, you might have seen me tweet this on Twitter as well, 1232.75 is the 100% extension from the decline off the highs. Okay, the ultimate highs that you made here in 2016, specifically in January, took you all the way down to this. Perfect tag with the median line for the current operative slope we've been working off from the highs. And basically, this is still just basic trendline resistance and a parallel off that high. And then you had an outside day reversal off that level as momentum held 40 support. I mean, you couldn't ask for a cleaner reversal signal. It's just that trying to get in it after it stretched higher was very hard because the pullbacks were very sudden and it just continued to press. So sometimes you miss the trade. It's good that you were able to recognize it. Always look forward to new opportunities. Hindsight's always 20/20. So long story short, 1278.85 was near-term resistance. We plowed through that again today. The other target we talked about, 1296, we plowed through that. The major level of resistance that we highlighted was right here at terminal in red, and we just missed it by a couple of pips. The high was 13.10.13. The monthly open is 13.14, literally, figure. So we just missed that. You have the upper median line parallel, and here we are pulling back below the 618. Exhaustion on my mind? Sure. Near term? Sure. Some sideways action? No problem. That's the level to beat still. No change to any of those levels that we talked about on dollar ZAR. But what a play, right? Biggest two-day stretch that we've seen this year. So another one that you want to keep an eye on this week, not only because we're watching dollar price action broadly speaking, but also because we're looking at the South African Central Bank. SARB's on tap next Wednesday. And could really shake things up for this pair, specifically with the move that we're seeing. S&P, I did promise you that. Here's number 14, Pete, coming right up. SPX looks like this. Daily chart, still pretty clear in my mind. If you look at this setup that we had from last week, same levels apply, okay? I'm still bearish below the monthly open, still looking for that stretch into 2307, 2315. 2307, guys, remember, is the objective measured move of the triangle break. So irrespective of what I think or anything, just classical technical analysis, that's sort of where you'd want to look. I stretched that zone into 2315 to account for the 1618 extension of that same decline. Both of those converge on the lower parallel heading into tomorrow. On the intraday, here's what we're looking at. Guys, remember this chart? We published a piece right about on the rally here, looking for 2360, highlighting bearish invalidation at the monthly open. Again, those levels remain broadly unchanged. Near term, even 2360 at this point would be a decent level from a near term to even bring down your bearish invalidation. Let's do that. 2360, 2358. You're looking for a move ultimately down to that 2307 level. Questions on SPX? Strong rebound here. So Pete, if you're getting involved in this right now, you know, it could push a little bit higher before we turn over. But certainly on just a classical move here, you'd look for that stretch down near 2315, 2307. You're more than welcome, sir. All right, with that, I'm going to go ahead and wrap it up. That was number 14. If there are no other questions, if you have any other questions, guys, feel free to drop it on the message board real quick. I'll be more than happy to take them. Euro Aussie, Pooja says, thanks, Mike. Just booked 37 pips on Euro Aussie short. Awesome. Looking for 142 to close out. We went over Euro Aussie, right? Let's take another look. Nice. You're looking for what now? 142. Yeah, I love that level. I love that level. Just watch the overnight lows. Or what was that? That was last. Yeah, that was the overnight lows yesterday. Watch this region here. 42.19. I'd hate to see you miss it on 19 pips, but it, you know, certainly that median line would be a good region. I would even like a break below 42, to be honest with you. Check the weekly open. The weekly opening range low doesn't even come in till there. So I'd be looking there first, Pooja, and then if you get through there, it might be worth it to hold on. Really nice consolidation here, divergence into the high that we've been talking about. I do like it. And remember where Euro's coming back from, guys. Always remember the broader picture. Watch that 2016 open 200-day confluence. It's going to struggle there. All right, guys, I'm going to let it go. I will see you all bright and early tomorrow morning. Till then, best of luck trading. Cheers.